is Forex. The foreign exchange, also known as FX or Forex market, is a global marketplace for exchanging national currencies against one another. Each Forex trade involves two currencies because you're betting on the value of one currency against another. In the euro, US dollar, the most traded currency pairs in the world. The euro is the base currency and the US dollar is the quoted currency. If the price of the euro-US dollar pair is 1.12, it means that 1 euro is equal to $1.12. If, for example, the number increases, this means the euro is getting stronger in relation to the dollar. The Forex market is traded 24 hours a day, 5 days a week, starting each day in Australia and ending in New York. The Forex markets are the largest in terms of daily trading volume in the world and therefore offer the most liquidity. For traders, especially with limited funds, day trading or swing trading in small amounts is easier in the Forex market than in other markets. All of that has led Forex to become the favorite place for many traders. A chart is simply a visual representation of a currency pair's price over a set period of time. Let's take a look at the three most popular types of price charts. 1. Line chart. 2. Bar chart. 3. Candlestick chart. Line charts are drawn by simply connecting one closing price to the next closing price in one single line. The main advantage of this type of chart is that it's extremely clean. It filters out a lot of market noise. A bar chart is a little more complex. It shows the opening and closing prices as well as the highs and lows. The horizontal line on the left shows the opening price. The bottom of the vertical line shows the lowest price for that specific time period. The horizontal price on the right shows the closing price, while the top of the vertical line shows the highest price for that specific time period. The candlestick chart is a variation of the bar chart. Candlestick charts show the same price information as a bar chart, but in a prettier graphic format. The larger blocks in the middle are called bodies. The vertical lines above the body are called the upper shadow. The vertical lines below the body are called lower shadows. Green body candles indicate that the currency closes above the opening price. Red body candles indicate that the currency closes below the opening price. Candlesticks are easy to interpret and are a good place for beginners to start figuring out Forex chart analysis. Short and long positions. In the trading of assets, an investor can take two types of positions. 1. Short. 2. Long. In the case of a short position, traders are hoping that a currency will decrease in the future, so they sell it at a higher price and buy it back at a lower price in the future. This option is known as going short. For example, if the New Zealand dollar against the US dollar is worth 0.7000 and the trader analysis shows that it might depreciate in the future to 0.6980, the trader would sell at the high price, or in other words, go short, once the price depreciates to 0.6980. Then buy back and make money from the price movement. In the case of the long position, it's the typical opposite of the short position, in which you buy low and sell high. Traders hoping for a currency to increase in the future, so they buy at a lower price and sell it back at a higher price. This option is known as going long. There are short and long positions in a nutshell. Pips, points, and ticks are terms used to define price changes in the financial markets. A point represents a small price change to the left of the decimal point. An investor might describe a stock price increase from $80 to $84 as a 4 points movement rather than a $4 movement. A tick denotes the smallest price change to the right of the decimal points. The market has different tick sizes. It could be 0.01, 0.001, or even 0.0001. A pip usually refers to the fourth decimal place of a price. If the euro-US dollar pair moves from 1.1307 to 1.1308, it is a 1 pip movement. However, sometimes the term can be used for any possible price change regardless of the decimal place, precisely like the tick. Pip term is largely used for traders in the Forex market. The bid price is the best potential price a Forex trader is willing to sell or transact at. It is always slightly below the market price. Ask price is the price a trader is willing to buy a currency pair at. It is always slightly above the market price. The price we see on the chart is always a bid price. Ask price is always higher than the bid price by a few pips. Let me explain in more detail. The euro against the US dollar has a bid price of 1.1250. That's the price a trader wants to sell the euro-US dollar. For instance, a seller who thinks the price would decrease might sell at the bid price to take the advantage of the fall. If the euro against the US dollar has an asking price of 1.1251, that's the price a trader wants to buy the euro-US dollar. So the difference between the ask and the bid price is known as the spread. Loss and take profit. A stop loss is a predefined level on the price chart that closes a losing position, even if the trader is not with their device. It ensures minimum losses and closes a position. It's abbreviated as SL Stop 2. For example, a trader goes long or enters a buy position by entering the market at 1.1270. Expecting the price to move higher, he knows the market is unpredictable, and it might go into the opposite positions than its expectation. So, he placed the stop loss below the entry price if the bid price hits the stop loss at 1.1225. The position is closed and a minimum loss is ensured. Stop 4. A take-profit order is a standard order to close a profitable position once it reaches a certain level of profit. Selling at this price ensures that the trader will make a profit on the trade. Take profit is abbreviated as TP. For example, a trader goes long or enters a buy position by entering the market at 1.900. Expecting the price to move higher, he wants to benefit from the raise, so he places a take-profit order at a point higher than the entry price, say 1.1370. If the bid price hit the predefined take-profit at 1.1370, the position is closed in profits. The stop-loss and take-profit can be preset before entering a trade by clicking on Trading. Then New Order on your MetaTrader 4 platforms. Here, you can input the value of your stop-loss and the value of your take-profit before executing your trade.